Hello students, welcome to class 12 of accountancy, chapter number 1st, accounting for partnership fundamental. Students, today we will do capital account. So today our topic is capital account. Students, partners are bringing in capital in the firm and we have to calculate the capital at the end of the financial year, because sometimes capital keeps on changing because there are two methods of capital, fixed method and fluctuating method. In fixed method, capital is fixed, it is not changing. It is changing only when two transactions happens. First, additional capital brought in, second, drawing from capital. Second is fluctuating capital. Fluctuating capital keeps on changing every year. So today in this video, we will learn how to prepare capital account. This is outline of the two account maintained under the fixed capital account method. So when there is fixed capital, it means the capital is fixed, we have to maintain two accounts. First, partners capital account, because capital is fixed. Second, partners current account. So in capital account only capital will be there, and if drawing against capital is done, it will be debited, and if additional capital is brought in, it will be credited. Else other all the things, partner's salary, interest on capital, commission, profit and loss appropriation account, drawing, interest on drawing, loss will be in current account. We have to keep in mind some points while preparing capital account. First point of view of preparing capital account should be of a partner. आपको पार्टनर के पॉइंट ऑफ व्यू से सोचना होगा. Second, all the profits of partners will be credited. जितने भी profits होंगे पार्टनर के, it will be credited. It means you write it here, like see interest on capital, partners profit, commission if partner is getting any commission, if partner is getting any salary, if profit is distributed among them, these all are profits, so it will be credited. Now all the losses of partners will be debited, like drawing, interest on drawing, it will be debited. So viewpoint of preparing capital account should be of partner. एक पार्टनर के हिसाब से हम सोचेंगे. Partner's profit will be credited and partner's loss will be debited. Okay students. Third thing, all the things related to partners will come under capital account or current account. Remaining all the transaction will not come in capital account or current account. पार्टनर से रिलेटेड जो भी चीज़ें होंगी सिर्फ वही कैपिटल अकाउंट में आएंगी. If the transactions are not related with partner, it will not come under capital account or current account. For example, manager's salary, manager is not our partner, so manager's salary will not be here. Manager's commission, it will not be here. Okay, interest on partner's loan, it is charged against profit, it will not be here. So all the things related to partners will be in capital account and current account, and other things will not be here. Fourth point, while preparing capital account, first we have to prepare profit and loss appropriation account. After preparing profit and loss appropriation account, then we can prepare capital account. Now let us talk about fixed capital account method, how it is prepared. First of all, see the format. There are two sides, debit side, credit side. If you can see the format, particulars column is there, then number of partners, each partner is having separate column, X, Y, Z, then again particulars, then again three partners. If there are two partners, there will be two columns, like Ram and Sham are two partners, then particulars, Ram, Sham, particulars, Ram, Sham, like this we will do. Okay. Now why we are having this particular columns? Because capital account is calculated separately for all the partners. We cannot combine it and calculate, we have to calculate it separately. That's why we have to prepare different columns of different partners. Okay students, now see what we will write. First we will write by balance BD. What is by balance BD? It is opening capital. Opening capital of the partner will be by balance BD. It will come under X, capital will come under X column, Y is under Y's column, and Z will come under Z's column. Okay students, so by balance BD, it will be the starting, it will be opening capital. Then if additional capital is brought in, if partners is bringing more capital, additional capital, then it will be credited by cash or bank additional capital X, Y, Z. For example, only Y is bringing, we will write only in Y's column. If 3 of them are bringing, we will write in 3 of them's column. Okay students, now in debit side, cash or bank drawing against capital. If drawing against capital has been done, the capital will reduce, so we will write it in debit side. If only Z is drawing, then we will write it only in Z's column. We will not write in X and Y's column. So when 3 of them are withdrawing, then we will write in 3 of them's column. Then after writing this, we will calculate amount of X column and we will subtract it from debit side's column. For example, opening balance was 1 lakh, additional capital was 10,000, so it will be 1 lakh 10,000. Then drawing is of only 20,000. So 1 lakh 10,000 minus 20,000, balance CD will be 90,000. And what is this balance CD? This is your closing capital. Okay students. Now if I talk about current account, all the other things related to partners will come under current account, except charge against profits. First of all, if current account balance is there, by balance BD. If it is credit balance, then we will write in by balance BD. Whatever the balance is, we will write in the columns of different partners. Now, profits of the partners will be credited. Interest on capital. What is interest on capital? Partner has invested capital in the firm on which he is eligible to take interest. So, partner is getting that interest. So, it is his profit. So, it will be credited by interest on capital. If 3 of them are getting, we will write in all of them's column. If only X and Y is getting, we will write in X and Y's column. Then commission, if any partner is getting commission. Partner's salary, if any partner is getting any kind of salary. And if our profit and loss appropriation account shows profit, it will be credited. So, all the profits will be credited of partners, because point of view is of partners. Then debit side, in case if there is a debit balance of current account, we will start it from here by to balance BD. Then drawing, interest on drawing. Okay, we will write it in debit side, drawing and interest on drawing. Okay. Then if we are having loss in profit and loss appropriation account, it will be debited. So, whether it will be loss or it will be profit, both of them will not be there. And same is here, whether it will be credit balance or debit balance, both of them will not be here. Okay students. Now afterwards we will add up these columns. For example, X column total is 50,000, Y's column total is 20,000. So 30,000 will be balance CD. It will come in debit side. Okay, how we are calculating balance CD? If your credit side balance is 20,000 and your debit side balance is 50,000, which is greater? This is greater. So we will subtract 20,000 from 50,000. What will be the balance? 30,000. It will come in the column who is having less balance. Okay. So after deducting 20,000 from 50,000, we will write it in credit side. 30,000 will be written in credit side, because credit side balance is less. It will be known as balance CD. Okay. And now for example, if debit side balance is less, then for example, credit side balance was 50,000 and debit side balance was only 10,000. Okay, so we'll deduct 50,000 minus 10,000, 40,000 will be there. Where it will come? It will come in debit side. Why? Because debit side balance is less. We will write 40,000. This will be the balance CD. Like this we will write balance CD. Okay students. Then same we will go with YS column. We will add YS column amount and we will deduct it from this side. We will have our balance CD. Same with Z's column. We will add up these amounts and we will minus it from these amounts and we will get our balance CD. Now students, capital account balance will always be credited. It will come under only in credit side. Okay, it will never be debited. But if I talk about current account, it may change. Sometimes it will show debit balance, sometimes it may show credit balance. Okay, you can see here by balance BD we had started our question. It is always credited. Okay, but in case of current account it can be credited, it can be debited. That's why they have written in both the sides. Okay students, so capital account balance will always be credited, but in case of current account it may be debited, it may be credited. Okay students, so this was your fixed capital account method under which we are preparing capital account and current account. Okay, now outline of the capital account under fluctuating capital method. So if capital is fluctuating, only one account we are preparing, that is only partner's capital account. Rules will be same, point of view will be of a partner, partner's profit will be credited, partner's losses will be debited, only partners related things will be entered. Okay students, now what we'll do, we will combine both the accounts, capital account and current account together. We do not have to prepare it separately. Now we will start our question from by balance BD. What is this by balance BD? This is opening capital. Now fluctuating account opening capital can be of both the sides. It can be debited, it can be credited. Okay, that's why they have written here also. In case debit balance opening balance is there and in case credit opening balance is there. Okay students, because it is fluctuating capital, so it will keep on changing. Sometimes it will show debit balance and sometimes it can show credit balance also. Okay students, so we'll start our question by balance BD, whether it is of credit side or debit side. This is our opening capital. Then if additional capital is brought in, see we are combining both the accounts. If additional capital is brought in, we will credit it. Interest on capital, partner's commission, partner's salary, profit from profit loss appropriation account, all the things are credited. If there was debit balance, opening balance, then we will write it here, drawing against capital, drawing against profit, interest on drawing, in case there is loss in profit loss appropriation account, and balance CD. So balance CD can be of both the sides also, it can be credited, it can be debited. The formula of calculating balance will be same. We will add up X column, this side and this side, both the sides total we will have. We will deduct both the totals and we will write the balance where the total is less. जहाँ पे भी total less होगा, कम होगा, वहाँ पे हम उस balance को लिख लेंगे. Okay students, so this was format of fluctuating capital account. Now let us solve one question so that we can understand this concept more clearly. This is our question. I will also write it here on the board so that the question will be summarized here. Okay students, first let us see the question. A and B are partners with capital of 60,000 and 20,000. Okay, I will write it here. A, B. Capital, it means opening capital. Opening capital of A is 60,000 and opening capital of B is 20,000. Okay students, now net profit before giving effect to the partnership deed for the year ended 31st March 2020 was 24,000. Net profit was 24,000, so net profit is equal to 24,000. This is our profit. Okay students, then the partnership deed provides for the following. So partnership deed is saying that B is entitled to a salary of 6,000 per annum. So salary, partner's salary, only B is getting, A is not getting, so we'll write it in B's column. 6,000 rupees he is getting per annum yearly. interest on capital is to be allowed 6% per annum. So interest on capital is 6% per annum. So we'll write interest on capital 6% of 60,000 will be 3,600. 6% of 20,000 will be of 1,200. So this will be your interest on capital. Okay, students. Now, drawing of the partners A and B were 6,000 and 4,000. So drawing will be 6,000 and 4,000. 6,000 and 4,000. Then interest on drawing for A being 200 and B 100. Now see, here we can see they have written here also interest on drawing is to be charged 5% per annum, and they had already given interest on drawing for A being 200 and 100. So student, when we are having both the things, it means question is saying that the interest on drawing will be charged on a particular percentage, and again the question is saying that interest on capital amount is this and this. So what we will consider, we will not consider this percentage of interest on drawing will not be considered. What we will write, interest on drawing will be, A's will be of 200 and B's will be of 100, because they had calculated it given us. So we do not have to calculate it again. Okay, so we will avoid this C part because this is of no use. They had given percentage and also they had given interest on drawing amount calculated already. So we will consider the amount which is already calculated. Okay, students. Now show how profit will be distributed between A and B, and also prepare the capital account of the partners along with their drawing accounts if they are fixed and if they are fluctuating. So we have to calculate profit, and then we have to prepare account. First we will prepare profit and loss appropriation account. Okay, students, we had already done it in my previous video, and I had solved number of questions there. So I think it was clear for you. So first of all, we will write by profit and loss account. Here will be the profit 24,000. Profit will be here in credit side. Okay, students. Then what is the next profit of partner? Interest on drawing. So by interest on drawing A and B. So we will write it 200, 100, total 300. 200, 100, total 300. Okay. Now interest on capital will be debited. What is interest on capital? 3,600 and 1,200. Salary will be credited. B is salary 6,000. Okay, students. So salary will be credited 6,000. See, I had summarized this question here. After summarizing, again and again I do not have to go to the question. I am having one summarized format here, and I am doing entries from here only. Okay, students. So this is easy format of doing these accounts. Okay. Now 24,000 plus 3,000, 24,300 minus this 10,800. Amount will be 13,500, because profit sharing ratio is not given. That's why we will distribute it equally. So 13,500 will be distributed among them in 6,750 and 6,750. So the profit and loss appropriation account shows profit. And what is the profit? 6,750 and 6,750 rupees. Okay, students. Now let us prepare capital account. We will prepare in both the methods. First will be fixed capital and second will be fluctuating capital method. Okay, students. Now see, if the capital is fixed, we will prepare two accounts, capital account and partners current account. There was no additional capital, no drawing from capital. Okay, students. So we will write only by balance BD 60,000, 20,000. This opening capital 60,000 and 20,000. Okay, students. Then because additional capital is not there and drawing against capital is also not there, so balance CD will be same. It means opening balance and closing balance will be same, because if you remember, I had already told you fixed capital is not changing. It is only changing when there is additional capital brought in or drawing against profit is done. Okay, students. So both the things are not there, so the capital will be same to balance CD 60,000 and 20,000 only. So this is your capital account. Now what about current account? All the things other than capital will come under current account. Okay, partners profit will be credited, partners losses will be debited. Okay, now what are the profits? Capital already we had written in capital account. Salary Okay, salary will be created, only B is getting, so we will write in B's column only. Interest on capital 36,1200, interest on capital 36,1200, profit of appropriation account 6,750, drawing 6,400 will be debited, interest on drawing 200 and 100 will be debited. Okay students, so it is very simple. Salary credited, only B is getting, interest on capital will be credited, drawing will be debited, interest on drawing will be debited, and profit loss appropriation profit will be credited. Now what we will do, we will find out balance CD. We will add up this amount 6,750 plus 3,600, then we will minus it with 6,200, we will get 4,150, that will be balance CD. Same we will do here, 6,000 plus 6,750 plus 1,200 minus this 4,100, amount will be 9,850, we will write it here. So like this we will calculate balance CD. This is your closing balance of current account. Okay students, now if you are preparing only partners capital account under fluctuating method, we will mix this both the accounts. We will start our account with buy balance BDC, buy balance BD 60,000, 20,000. Interest on capital, profit loss appropriation account, salary, we are writing in credit side. Okay, and drawing and interest on drawing will be debit side. Now again we will find out our balance CD. Process will be same, A's column will be add up and this side column will be add up, and we will subtract both the columns and we will get our balance CD. So okay students, I think that the capital account is clear for you how we have to prepare capital account. Okay. Now, what is interest on capital? Interest on capital allowed on compensate a partner for contributing capital to the firm in excess of the profit sharing ratio, like interest on drawing. It is also calculated at the agreed rate with reference to the time capital has been used in the business. Thus, interest on capital is allowed on the opening balance of the partner's capital. So, interest on capital is a compensation to the partner for contributing capital in the firm in excess of profit, because partner is contributing capital in the firm, and because there are many partners, the capital amount is also different. So if someone is investing more capital in the firm, then he will get more interest on capital. So it will be a compensation for them, that if they are investing more capital, then they will have in the way of interest on capital. Okay students, so it is given on the agreed ratio, which is already written in partnership deed. Now what is additional capital? If additional capital is introduced during the year, interest is allowed on it from the date additional capital introduced till the end of the accounting year. If the additional capital is being introduced, then the partner will also get interest on capital on that additional capital, but date wise, month wise, he will get interest on capital on it. Drawing of capital, if capital is withdrawn by a partner during the year and interest is allowed on capital, interest is not allowed on the amount withdrawn from the date of withdrawal of capital till the end of the capital accounting year. Okay students, so if the drawing against capital has been done, we will not pay interest on the amount of that particular drawing which we had done. For example, if partner is withdrawing 10,000 from capital on 1st of October, okay, so how many months interest he will get on this 10,000? April, May, June, July, August, September only. It means of 6 months interest he will get, remaining 6 months interest he will not will be get. Okay students, let us solve one question, so we will be able to understand this concept more clearly. Now this is one example. Alok partner has capital of 5 lakh. As on 1st April 2019, he introduced additional capital of 2 lakh on 1st October 2019 and withdrawal 1 lakh on 1st January 2020. If interest on capital is allowed 10% per annum, calculate interest on capital. Now we have to calculate interest on capital on these methods. Now first of all we will write it here, what was the capital on which date. Okay, so if you can see on 1st April Alok is having capital of 5 lakh rupees. So this is his capital of 5 lakh rupees. Okay, and he introduced additional capital of 2 lakh on 1st October. So on 1st October his capital will be 7 lakh. 5 lakh plus 2 lakh which additional he had introduced. Okay, Now on 1st January he is withdrawing capital. So on 1st January 2020 his capital will be 6 lakh, because out of 7 lakh he is withdrawing 1 lakh rupees. Okay students. So on 1st January his capital was 5 lakh. Now we will calculate the interval, time interval between them. Okay. So April, May, June, July, August, September. Okay students. So till September, how many months will be there? 6 months. So he will get interest on capital for 6 months on this 5 lakh. Then from 1st October till 1st January, the period will be of 3 months. So he will get interest on capital on 7 lakh for only 3 months. And if I talk about this 6 lakh from 1st January till 31st December, again the period will be of 3 months. So he will get interest on capital for only 3 months. Okay students. So how we will calculate? 5 lakh will be there. For 6 months he is getting, for 6 months, so 6 by 12 into what is the percentage? Percentage is 10% into 10 by 100. So total will be 25,000. Okay, like this will calculate 5 lakh 10% for 6 months. Then for 7 lakh 10% for 3 months. On the 6 lakh 10% for 3 months, and we will add this amount. Okay, then we will have our total interest on capital. So here we have seen that the amount of capital is invested in the business and the partner is getting interest, but only for the time being the capital is invested. जितनी capital invested है सिर्फ उतना ही interest मिल रहा है, उससे ज़्यादा interest नहीं मिल रहा है. If the capital is changing, the amount of interest is also changing. Okay students. Now these are some provisions related to interest on capital. First provision, when the partnership deed does not exist or partnership deed does not provide for interest on capital. So if our partnership deed does not exist or there is no provision regarding interest on capital in our partnership deed, so no interest on capital will be paid. कोई interest on capital हम pay नहीं करेंगे. This is the rule according to Partnership Act 1932. That if partnership deed is absent or there is no provision related interest on capital, then no interest on capital will be paid. So interest on capital is not allowed. Then when the partnership deed provides for interest on capital but is silent on whether interest is a charge or appropriation. Partnership deed provides interest on capital, percentage बता दिया, what is the percentage of interest on capital, but it is silent whether it is a charge or it is a appropriation. Now what is a charge? Charge means whether your firm is incurring loss or having profit, we have to allow interest on capital. And what is appropriation? Appropriation means if our firm is incurring loss, then we will not allow interest on capital. So there are some conditions, situation once loss is incurred, because it is silent regarding whether it is charge or appropriation, so we will consider it as a appropriation. So if loss is incurred, interest on capital is not allowed. If profit before interest is equal or more than the interest, then we will give interest on capital. If interest on capital total amount is 10,000 and we are having profit of 10,000 or 15,000, more than that 10,000, we will give it. Then profit before interest is less than the interest. If the interest amount is 10,000 and profit is only of 8,000, in this case we will give interest on capital, but what we will do, we will divide that profit in the ratio of interest on capital. See, interest is allowed only to the extent of profit in the ratio of interest on capital of each partner. Related this, we had done one question also in my previous video. Then when partnership deed provides for interest on capital as a charge, so whether it is a profit or loss, we have to give interest on capital to the partner. Okay students. So today we had learned about capital account. How we have to prepare capital account, I told you the format also. Then one question we had solved. Then interest on capital we had calculated in different situations. Then different provisions of interest on capital we had done. Thank you.